TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. First off, we're going to start off with the German DAX and the FTSE. Pay close attention to the FTSE, folks, because it's really weak. The DAX is weak also. You can see the two beautiful swings that we had up marked by those dark lines. It was due to roll over. It's certainly done that. And the FTSE has rolled over in very, very strong fashion and is holding right at the 61% retracement as we speak. So I think it's something that we need to be alert to, because I want to talk about our market a little bit, because I think it's going to be very interesting. But before we get to that, we need to talk about the bond market, folks. We were saying, the market was extremely bearish in the Treasury bond market. And what happened yesterday was something very important. And that importance means that we broke below the 38% level. We got down to the low end of the 177 range, and we're not looking very good in the bonds, but we're very oversold, so we should get a rally. But if we get this rally, and I'll show you what happened yesterday because we were talking about it, we made that small little ABCD pattern there right at the 38% level at 179, and then we broke and we went all the way down to 177.16, and we're making that same type of pattern right now. So this market is in a bearish tone, and it's going to take a move above 180 to get it back to moving. And I don't know if we're going to get it or not, but there's certainly a possibility that we could get it. That's the main thing. Now, I wanted to run through a cross rate that is at really critical levels right now, and I just wanted to bring it to your attention because it's very dear to our heart here, and that is the Canadian dollar. And I'll get this up here so we can see it here. Where did I put it? Where did I put it? Here it is right here. As you can see here, we'll get it up. We have made a three drive to a bottom in this Canadian dollar on a 4-hour chart. That goes back to the June low, up to the late June high, down to the July low. That's a 1.27 expansion. And so far, what happened today, we've been following it closely. You'll get up here so you can take a quick look at it. You'll see here that it has made a small ABCD pattern and has backed off a little bit. And right now we're setting back at that high at 132.50, because if we start popping through here, that means that three drive pattern could be in place and it could be bottoming. And the key words there is could be and maybe and should, because we don't know for sure. All we're doing is we're looking at patterns. Sometimes they work, sometimes they don't. And that's the key, is sometimes. Now, another key part of that Canadian dollar cross rate is the Japanese yen. And let's get up here to take a look at that, because it's doing the opposite. As you can see, it's making a three drive to a top pattern at the 78% level at 8,100. We've already backed off 55 pips. We have the ABCD. We have the three drive to a top pattern. We have the 78% retracement. And this is really poised to have a pretty substantial move based on what we're watching. Now, above 81.20, this would not be working. So keep in mind that if these things fail, and when they do, we know that we need to stand aside. That U.S. dollar index is still holding that 92.40 level, but it's certainly not rallying very much. But that could change in a heartbeat. But it is holding so far. The euro is backed off from its highs, and that has done pretty much exactly the same thing that we're watching here. So those are the key ones that I wanted to bring to your attention today. But I've got some other things that I think will be interesting, but you never know. Sometimes you like them, sometimes you don't. Here is that Treasury bond pattern that I wanted to bring to your attention that we just did. I updated it so you can see where the resistance comes in at that 179.02. So if we can get above 179.22, then we've got a chance. But there is this market has a predominantly bearish tone right now, folks, because we broke below that important 382 level, and that's what's important. On the opposite side of this, the gold broke above the 382 yesterday at 1961. We got all the way up to the 1.27 expansion at 1974. But the silver is acting much, much more bullish than the gold. Silver was up at the 78% level most of the time when we got up to that almost 27 and change. So it's held up extremely well. So silver is looking very, very bullish. Folks, I don't know what's going to happen, but nobody else does either. But let's prepare for ourselves. Someone asked me that's been around the stuff that I do, since, let's see, 1985, I first met Jimmy. Anyway, I wanted to bring this old chart to your attention because it's going to be something that may or may not happen. And if it does, this is what's going to be important. Here is the chart of the S&P 500 back in August 25th when we made the high up there at, I think we were at 2850 or something like that in the Dow Jones. That was harmonic convergence. We had 5 planets all in the sign of, what was it? The one right after Leo. I can never remember. That's not important. Anyway, they were all in the same sign, and the market backed off and made a perfect Gartley on October the 2nd of 1987, and from there it dropped from 330 all the way down to 220. Now, folks, that is 100 handles, but it's 100 handles at $500 a point. So that's 100,000. That was a $100,000 move. That bankrupted so many of the floor traders because of the gap that we had down there, which you don't really see. If you look at that yellow box right there, you'll see how the market closed really badly right before the big move down, right above that bar there. It was trading at around 305. That 305 was down. It was on a Friday, August the 16th, when the options expired. I happened to be in those, and I sold them up there at 330, and that was a huge move. They expired at that point, and I got out right on the close at the low end of the day. The Dow was down 104 that day, and I was happy as a little pup because I had just made a lot of money, and I was looking to, anyway, I was looking for a lower low coming in on Monday. Hold on, let's just take a second. We've got a where were you? Oh, in 1987, I was in Pismo Beach, California, and I had moved from John's house over to a small apartment on I can't remember, San Remo, I think, or something like that, in Shell Beach, which was about 3 miles away. I was waiting for the house to be completed up on the hill, the big trading house at 911 Wadsworth. If you can believe that, that's what the address of the house was, folks. 911 Wadsworth. And that house has now been torn down, and they built a huge house up there. But that's where I moved to at that point. But that was in '87, and in August, in early August, it was around about the 15th, right about this time, I was on a show in Los Angeles, and Arch Crawford was on the same show I was, and we were both looking for a big move down into October. And I told Bill Griffith, I said that the market would be down at least 300 Dow points.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Mr. Z on the line, and someone mentioned that Neil Cavuto talked about the late great Arch Crawford. He was great yesterday. I talked to him in the morning yesterday. So I don't know what's happened. Mr. Z, are you there, my friend?
I am. So Neil Cavuto made a mistake, did he?
I hope so, unless he heard something I haven't. It was yesterday. It was yesterday that I talked to him. Not this morning, but yesterday morning I talked to him. So I don't. Wow, that's. I got to figure that one out. I just called. There was no answer. That was a little bit disturbing to me. Go ahead, my friend. What's your question?
I thought I'd touch base with you about a couple of things, a hodgepodge of ideas. First, let me just share an observation I'm making right here in the silver price. I find it particularly interesting, and maybe it's tradable, perhaps it's not, but the 26.27 to 26.35 mark is fascinating. We're right above that right now on the September COMEX silver contract. That was 26.27 was the high July 28th, and then there was an abrupt reversal. 26.35 was the rebound high. I think that was Wednesday morning. And then we've come right down to that level back at 3 a.m. today. So we're sitting right above this very pivotal level, and I'm kind of thinking if we hold this, we can move higher, and if we fall under, perhaps it's a breakdown short idea. So I just wanted to share that observation first.
Okay.
And second, I wanted to ask you on the S&P futures. We've made several highs this week up there at that 33.82 mark. Wanted to ask how you handle stops here. If one is looking to try a position swing trade shorts, not just a scalping trade, where would you put your stop above the markets to tell you were wrong on the idea, please?
Well, John, it depends on what your risk threshold is. And you sent that thing from the great bear market rallies that I really thank you for. And I posted it into the room here, and it shows that on August the 18th, we hit 32.78, and we hit 36 in November. Now, I don't know if we're going to get above the that 3,400 level again or not, and I'm not sure. But all I do know is that if you have to risk anything, the most you have to risk when you're trading the S&P right now, in my opinion, and this is strictly my opinion, if you take, basically what that harmonic number is, which is basically 5.5, and give it 3 iterations, so you're taking roughly a 16-point stop in the S&P if you're going to try to do something, with the stop up in here. So that's how I'm handling it. And in fact, today's the day that I'm really considering, issuing a sell signal. And the reason why I'm doing that, John, has nothing to do with the S&P. It has to do with the overall broad market that I've posted several times, and that is the fact that New York Stock Exchange Index has been lower 2 days in a row after hitting the 78% level. And that to me is very bearish. That means that the overall market is certainly not, moving up with the rest of the market, with the NASDAQ and then those stocks in the S&P. Because you figure the S&P, you've got about 60 stocks in there that run the whole 500, and with the NASDAQ, you've got about 10 stocks that run the whole 100. So that's the way I'm looking at it. And of course, I'm watching the fact that August and September are times when we've had some really substantial moves, and that's what I'm looking at anyway. I hope that makes sense, but that's what I'm looking at.
I appreciate you sharing that 3 iterations times that 5.5 number. I hadn't heard you mention that in the past, so thanks on that. I do appreciate it. I am looking in Tiger TV, the image that I in the Tiger's Den. In particular, I'm reading market rally, the S&P 100 to 3,600. I got that off of a website called Market Ear. Just interesting info was published real. What that particular data is showing is saying, okay, fine. The author of that looked at 3 bear market rallies in history. The rally off the October-November low of 29, the rally off the 38 bottom, and a rally off the 74 bottom. And what the chart is showing is if, in fact, this year's S&P is tracking one of those 3 rallies in history, where it would top out. And if this year's S&P is tracking the 1929 rally to lower highs, it would be topping here August 18th. If it was tracking 38 precisely, it would continue to rally into November 2nd. If it were tracking the rally of 74, this year's S&P would rally and peak out January 4th. And that's not to say this year will exactly match one of those 3 preceding years, 29, 38, or 74. It's just helpful info that I like to use to say, okay, fine. For example, if we happen to top out here today, the 14th, or into next week, say Tuesday, the 18th, and turn lower, I'll say, oh, goodness, perhaps a 29, or excuse me, would be a 1930 lower high, and subsequent price action may, in fact, be repeating here in 2020. So that's how I'm using that info, just to describe that thoroughly.
Okay. Well, my plan is, and I was getting ready to complete that when you called in, and I will repeat it when we get back from the break, but I want to go over, I know it's not going to be exactly like 1987, and I know it's not going to be exactly like 2000 and 2000, and I know it's not going to be exactly like 2007, but it'll be one of those little combinations that we want to be watching here the next 5 or 6 days, especially coming in here on August the 19th when we have the new moon, and that'll be a really key one that I'm waiting for, because I'm not going to do anything today. I've already decided to that, but I am going to decide whether we're going to. Hey, and I don't, folks, I don't think this is. Hey, I'm not even saying it's a crash. I'm just saying it's a correction coming. If you play these markets for a crash, send your checks in directly, to the exchange, so you don't have to pay a commission. you don't get crashes. You get a crash every 30 years. Yeah, you don't want to do that.
The best we can hope to do is get the turning points. Thanks, Larry.
Thanks for calling in, Mr. Z. We'll be right back, folks.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, this is Larry Pesavento. I'd like to comment that Mr. Arch Crawford is alive and well. I just spoke to him one more time, so just keep that in mind, that he is fine. There's another example of fake news. That's actually the second time that Neil Cavuto has done that, and I've interviewed with Neil quite a few times, and he's a real sharp guy, but, we make mistakes, and doing this show for many years, I do that all the time. Let's get back to talking about this market. market in 1987. We are not expecting a crash coming, folks, but we are expecting a top coming in here, probably on the 19th. That's a Bradley date. There was a Bradley date there on the top in August 25th, 1987. We had 5 planets there. We had to rally back right into October the 2nd. We came sharply down into the 16th on Friday. Market was down 104 points, and when you're at 2,800, it was actually 2,700 at that time. We were down 104 points, and I put an order in to sell more because my options expired, and the broker had already closed his book for the day and was gone. It was just a few seconds to go, so I missed that big down move. I had a couple of contracts short of the big ones, but that was a huge move down, folks. And believe me, it was quite terrible. So it was really, really, really nasty. And you thought it was the end of the world, but it certainly was. Ended up being one of the greatest buying opportunities of all time, because the low down there at 220 when the Dow hit, I believe 1,600, went from 2,850 down to 1,600. We dropped 16% in one day. That was an exact, to the tick on the Dow Jones Industrial Average. It was an exact 61% retracement from the low of August the 9th, 1982, 5 years previous. So these will be buying opportunities, but there is going to be a big correction coming here sometime between now and August the 19th. That's the way it sets up, looking at all these things, and that's all I know. All I'm going to be doing is looking at the patterns. If I get the patterns set up nicely, fine. That's it. That's all I want to be looking at, and I don't want to. Hey, and the other thing is, no, I'm not going to get into the politics. All I can tell you is we're going to be all right. That's the only thing I want to say. When I saw yesterday the fact that they had looted a Ronald McDonald house in Chicago, that means something, folks. That really does. We gotta pay attention to that, because when they start doing stuff like that, that's a big wake-up call for you folks. So you better be prepared. We must protect our Second Amendment, because we live in interesting times here, so let's keep that in mind. Of course, remember, I live in Arizona, where everybody has 4 guns, and usually we carry 3 of them with us at all times. Anyway, let's move on here to talk about a couple other markets. We've talked about the bond market. The bond market is bearish, folks. It's broken below the 382 retracement. That's not I got enough of the ammo. That's the problem is, folks, is there's hard to get ammo for some of the guns now, because they just can't supply it. So a gun is actually nothing more than a club if it doesn't have any bullets in it. But I don't. This what's going on in the news now is trying to be controlled by people that are trying to do one world order or something like that. But I don't think they're going to get away with it. But that's just, I don't know about you, but I give the American people a hell of a lot more credit than being smarter than what they're telling us in the news. I really do. Maybe I'm wrong, but that's it. Off your soapbox, Larry. Let's talk about the markets. Okay. I used to load my own ammo years ago when I did. Folks, I used to hunt when I was a little kid, 8, 9, 10. After that, when I got to be a teenager, I've never shot anything. I still do target shooting, but that's all I've ever done. And I don't plan to do anything more than that, but it's neither here nor there. Let's move on here to the next one here. What's funny is we have friends coming in from all over the world here to visit us, and many of them, they don't have guns in the countries where they are. If they go to Japan or China, some places like that, they don't have guns. And so we take them out to the range where the policemen, we have a police range here, and a policeman will take them up and, show them how to do everything. I keep my hands off, and they get a real thrill out of that. So it's a lot different. If you're in a big city, you don't exposed to that kind of stuff, but you're out in the hunt, out in the country, like Jimmy D said, that you grew up with those. I had my first gun when I was 6. I still have it. It's a little 22 Remington single shot. And, anyway, let's move on here to a couple other things that I need to talk about here on some of these stocks, because I think we're having some real interesting times. Let's take a look here And here's one that's real interesting now. And if you like patterns, and I'm sure you do, take a look here. Now, this is the NASDAQ. This is the big daddy rabbit. It's the leader of the pack. We've taken out the highs here, way back here. But look what's happened here. You were having a lot of ABCD patterns stretching up in here. And so we have some signs that the NASDAQ is starting to waver a little bit. Now, Apple took off like a striped duck yesterday, but some of the others did not. So they're showing signs that the FANG stocks are weakening just a little bit, but that could end in just a minute. What we've got to do, this is a Friday, so when we come in here on Tuesday or Wednesday, that's when we've got to be ready to see if this pattern is going to line up. That's why the 24/7 stuff, if you get, because I'm in there all night long, and I'm going to be really pressing the pedal to the metal, folks, in the 24/7. So if you're involved, get ready for the charts to come, because there's some really big ones that are going to be really exciting in the middle of the night, or whether they are, or middle of the day, wherever you're watching. I want to get those up to let you take a look at them. On that vein, if you remember yesterday, hold on just one second here, folks. I need to take a little drink of water. I'm still on that allergy stuff, but boy, I'm certainly get a lot better. Let's take a look at the one we were looking at yesterday, because it was a really nice setup, did everything perfectly, and that is the Christmas week in December. You'll notice here yesterday's low was exactly 497, as we predicted it could be. And believe me, the could be is the operative word there, because it could have easily gone through it. But it's had a nice 10-cent move to the upside. So if you did buy the Christmas wheat yesterday, make sure you put your stop at, break even, say 498 or 497. Put it break even, because it doesn't necessarily mean that it's going to go up from here. It just means that it's found major support at the 78% level. It didn't find support at the 618 last week when we tried it. We risked 4 cents on that. We bought it at 10, and we were out of it at 6, and then it went all the way down, to 97, and then now it's given the money back. But that's neither here nor there. So that's how you try to do it. Is you keep your losses as Sorry, 1 second. You keep your losses just as small as you possibly can. So that's the main thing. Another thing regarding a move coming down, a corrective move coming in the stock market, a lot of things are happening. But the most important thing is, like I mentioned with Mr. Z, is that, and I believe did I have that darn thing? Just let me bring it up here. Where are we trading at? 63 in that. Okay, let's see. The gold got up there. Oh, exactly at 65. Got to love it. Hold on just a second here. I want to bring this one up, boys and girls, so we can oh dear, hold on a second here. I've got to get over. Give me a second. And we got a break here. Okay, or do we have a break? I don't know. Yeah, yes we do.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Oh, dear. Okay, no, it's the sound is not working well. I hope the sound is coming through okay, folks, because on my end it's a bit garbled. Folks, that natural gas is really starting to move. We're really up near the highs that we were looking at before. Let's bring that to your attention here this morning because we're getting close to that big breakout level at, let's make sure we get it right here, at the 3090. Yeah, we're almost there. We could be there this morning, folks. So let's get this up here in the natural gas. That comes in at 2034. We're just about ready to hit 2.3. So we're only 400 points away. And the way it's moving, it could be there in a heartbeat. Look at the 61% and the 1.27 expansion up there. That comes in at 239. Pay very close attention to those. And folks, if we get above that, I mean, we're going to be looking at something like the silver market. This thing is acting, extremely strong. So that's what it looks like here in the natural gas. And I do believe that, it's got a chance to get higher. We didn't get down as low as I wanted to, but we got down to the 382 a few days ago at 209, I believe. And we're having another straight up move today. So we'll keep I'll keep an eye on it because that's levels that we're coming up to are major levels, 235 and then 240. So it's going to be a big move no matter what. Let's just see how we're running here this morning. Okay, just give me 1 second. Sorry, folks, 1 second. We're trading right at 230 now. We just hit 2.3, just making new highs here in the NASDAQ. So watch 2.34. 2.35. Those are the key numbers to watch, and then also keep an eye out if it gets above that 2.35. This is a big move, folks. Just like silver is a big move, we'd like to see silver back off just a little bit more. It came down $3. We'd like to see it get down to about the $25 per ounce level, where I think it would offer some really good. Really good value. Something big is happening, folks. I don't know what the heck it is. It might be with the U.S. dollar. It might be with these coins and stuff, these Bitcoins and stuff. But just look at the price here of Bitcoin, folks. I don't know much about these cryptocurrencies, but they're big now. I mean, you're talking a 500 billion market that they think will be at 27 trillion in 5 years. 27 trillion. Do you know how much that is? That's a lot. Anyway, we're trading right near 12,000. We've been here. We've been here between 11,000 and 12,000 for a week. Look at the last time we did that. We went from 9,000 to 12,000. If we get above say 12.5 or something like this, the boys are going to realize that something big is happening in these things, and they're starting to move. So, and I'm not trading them. All I'm doing is I'm just alerting to the fact there's something out there that they're changing. You know, they don't even use cash in the UK anymore. They don't use cash in China anymore. So it's, you know, we're next. You know, and some of the South American countries are that way too. It's all done on a telephone. They give you the telephone, you put your phone up, and there's your money, and they're tracking everything you do. But, you know, that's what's happening. So I don't know what it means, but I'm paying attention to it because it'll affect all of our markets. It'll affect our U.S. dollar. And remember, your U.S. dollar, you know, the euro's trading at 118 and change after hitting, 119.40 7 days ago. So it hasn't really backed off very much, you know. So let's pay attention to some of these things. What is the safest vehicle to buy Bitcoin or ETF derivative? Jimmy, I wish I knew the answer to that, because if you buy these coins, the first thing you have to do is you have to convert your money into Bitcoin in order to buy the things, and it's not easy, and it's not as safe as going to Merrill Lynch or TD Ameritrade opening account, because that's it's a different ballgame out there. They got these exchanges, and so it's a wild, wild west. But and that's what it is. It's the wild, wild west. The one that, the natural gas is moving big, folks. It hit. We were just talking about it at 2:30. Someone just posted. Bobby A. just posted that it just hit 233. So that's a big one. So let's hang in there and see what's going on. If you're short the Treasury bonds, I would suggest you're coming in here to this week. I would suggest you hold them unless they get above 179.10. We hit that 183 level. We dropped 6 handles, folks. We got all the way down to 177. We're 178 now, so that's got a chance to be a big one. I don't know. I think GBTC is the ETF for that, but that would be one way to do it, because I guess it would follow the same type of thing. I don't think I've ever even seen it. I'm going to write it down and take a look at it when we come up to the break, and we'll just look at the darn thing. It's called GBTC. Hey, folks, we're in some real speculative area here on TFNN, so let's not do that. Let's keep in mind, what we're watching here with some of these other things that are really easy to see, like the wheat and, the Dow Jones and some of the others. So that's it. Here's the chart that I was referring to when I was talking to Mr. Z about, and this is the chart of the New York Stock Exchange Index. This is the largest stock index as far as being fair with volatility and everything. We've been at the 78% level now for 4 days, folks. And with the stock market up really strong 2 days in a row, the New York Stock Exchange Index was down. We posted that chart yesterday that Rich Anderson sent, that those 50% of those stocks were already going down with the rest of the market going up. So we're looking at a two-tier market. You got about 50 stocks in the S&P that are rocking and rolling. You got about 10 in the NASDAQ that are rocking and rolling, and the rest of them are just rolling. So there's some signs out here. That's all I'm trying to bring it to your attention, folks. When I brought up that chart from 1987, for God's sakes, don't let anybody think that I'm talking about anything like a crash, because crashes happen once every generation or so. And, we're already in, we did it, 33 years ago? So that's not a big deal. Well, it is for some of you guys, probably weren't even born yet, but, I lived through that. So maybe I lived through it again. I don't know. But there's a possibility we could have a pretty good correction. Remember, we have a lot of things going on in the world that have been negative, and yet the market has gone straight up from March 23rd to where we are today. And that's, stock markets do that. If you've ever read the book, My Own Story by Bernard Baruch, he told Fanny Brice, the great actress, he said, the stock market exists for one thing, and that's for inflate prices so that suckers will buy it all the way down. And that was his idea of what the stock market was. Of course, he was a very, very close friend of J.P. Morgan and also Woodrow Wilson. All right, let's move on here to another chart that I think is important. You know what? The break is coming up already. Holy moly, guacamole. Well, I guess I can't hear if the music is coming in or not, but I'll just go to one more chart here, and that one is the, let's get that last one. Okay, hold on 1 second. Here's the noise coming in. Okay, I mistimed it, folks, because the music that gives me the notice that the break is coming is not coming through today for me, folks. I don't hear that, so I'm watching. Oh, there we go. Oh boy, Al, this music didn't come through, Bubba, so we're okay. We got about 2 more minutes, and I can bluff my way through that.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And that rang the bell. So this is where you really have to decide whether you want to stay in it for those last few points or whether you want to back off a bit. I dropped the AI forecast that should be topping in here. Whether it does or not remains to be seen, but we'll pay close attention to it. We're now getting the S&Ps trading around 33.64 here this morning. There was a minor support that we made there at 33.58, But if you get a chance to sell it up around that 33.70 to 33.75 area, I think that would be a really good place to look at it. And as I mentioned, you must use, because of the volatility that we're seeing here, you must use well, you don't have to, but I'm saying to give it volatility, you've got to give it about 15 points, which is $750. But remember, you're playing with a big animal here. It's a 3,000-pound gorilla, so you've got to be able to give it a little bit leeway. The Nasdaq, I think, is just out of bounds for most folks because it's just too risky because of the fact that you're looking at volatility that it swings $1,000 like it doesn't even mean anything, and that's a little over the pay grade of most of us here at TFNN, except for the O'Briens, who have all those expensive boats anchored there by their houses there in Florida, wherever they live. I don't know, they must have a fleet of those puppies now. Anyway, tomorrow was going to be Friday. Since today is Friday, tomorrow is Saturday, we have to get ready for next week. And remember, folks, we got to be prepared for the 18th and 19th. That's the Bradley date coming in. We got a lot of things occurring market-wise that are telling us there might be a place here where we're looking at a pretty significant correction, maybe 10, 15%, and maybe more. We don't know, and nobody does, but that's the good part. So we'll keep that in mind. We'll have something prepared for us, hopefully, on the 18th and 19th. We'll get a couple of these Astro guys like Shane and Arch and Tim Bost on to verify if we have a chance.